How to get a bank loan fast without collateral, best business loans for businesses. I'll be showing you today how to get this bank term loan combination with a bank line of credit and under one application for both. Very fast funding, up to 350,000, if not a lot more, with up to 10-year terms. And also, if you have previous debt, what can your situation look like? Before I get started with all of this, welcome in. If it's your first time here, my name is Michael with Viral Funding Solutions. I'm a business funding expert, a business loan broker expert, as well as a pre-underwriter slash underwriter who's been helping a lot of people and their business and businesses navigate through pre-funding, pre-application to the processing, the reviewing of all of this, and so much more. I'm the introverted, more analytical, cerebral, meticulous, calculated, very ethical type of person. I'm extremely loyal. I'm a Libra, if that says anything. I don't know if it does. To some, it does. I'm very nice, very responsible, accountable, understanding of your needs. And I know how to get through a lot of this when it comes to funding. I help people with their cash flow. I do cash flow analysis, profitability analysis, look at gross profit, net profit, a lot of different calculations. I'm very math and system brain oriented, much more of writing than I am in front of a video. So this is kind of hard for me to do. I've done plenty in the past, but it is still hard for me to do it. I think this is a way you get a lot of value. So if you would like to have an expert by your side, somebody who not only knows the what and how to do this, the understanding of it, but also as a human being has themselves as a character and characteristic traits together, personal growth and development. I work on a lot of that as an entrepreneur. I have other businesses as well. Then I'll be here by your side to help you. And I'll leave more information down below in the description on how to get started. I'll be going over a document showing you what it takes. So please stick with me. And I may have a form down below that you can fill out and submit and other ways to get in contact with me. So right here, how to get a bank loan fast without collateral, best business loans for businesses. So it is possible. There are ways to get a bank term loan without having to put in collateral. There's account receivables, inventory, machinery, real estate, or anything else. And you're looking at the loan to value, 60 to 80% of the account receivables inventory, or depending on the bank and depending on the market value, liquidation value. There's so many things that when you're looking at collateral, what you would have to piece together. Is it up to 80% if you're doing perhaps an SBA loan? Does the SBA loan work for you or does it not? Do you have enough business credit to qualify for an SBA loan and at times a bank loan as well? That would be something that they look at. Depends on the bank that you would go to. These are FDIC banks, just so you know that. This is very legit, and I believe I have the very best. So if you want the best from someone as a person and in your business to understand it better operationally, free cash flow, investment, financial, and in so many more ways, I'll be here by your side to help. And I'm on the back end too. So when you don't see me or hear from me, just know that I'm on the back end. There's reviewing there going on, the process, and understanding a lot of this with the team and so forth. So I want to switch screens over here. And I'm going to go over this document. I may leave it to you or for you, excuse me, down below in the description. And if it isn't there, I can share this with you in time to see what the best solution is for you. It might not even be a bank term loan. You might not be able to qualify for this. And if you're looking for something much more immediate and fast, so then later you're trying to refinance underneath an SBA, trying to consolidate underneath an SBA, there's potential there too, depending on bank policies, depending on how much time you've had, the amount of debt, how much existing cash flow, free cash flow, operational, financial, investment cash flow. There's many other things too to look at, deposits. And if you were to take a new loan, let's say for this example, you have what's called the merchant cash advance. If you haven't heard of those are based upon your future receivables, future sales, future value of those sales, etc. And so what you're getting is an advance based on those and what you'll be making in the future and then what you'll be owing back to the provider. Those aren't technically known as loans. In some states you might classify it that, but it's not a loan. It's not amortized as a traditional bank term loan like we're going to see here today. And if you have one of those and you have debt, even if you have something that hasn't aged, like you recently got an MC, I've dealt with a lot of different situations with people, friends, and many others who they have something where they just took it out. They're making minimal payments, as much payments as they can, or they haven't started. It's completely fresh. And if you're wondering, can I get that refinanced, consolidated, and get additional working capital for what you need to bridge cash flow gaps, to have emergency funds, a lower interest rate you need to use for inventory, for other ways of growth, perhaps equipment, if that bank allows it to, and the type of equipment, then there's that situation. Other times it may have to age a little bit, but in a lot of ways, we can look at it and say it hasn't aged past 30 to 45 days with those advances or that one advance, then yes, we can get started on this. And it's just a matter of understanding the cash flow needs. Do you have any more room to take on a new loan with the current amount of debt that you have? Is there enough room? So we're going to get into the debt service coverage ratio a little bit later. Profitability does matter to many banks. Other times it's like a lesser cash flow is much more important, especially right now in the market. But profitability, you can't discount that and not look at that, especially when you're looking at all these financials and what I look at as well. So right here, bank term loan, first option, FDIC bank, start here and please read below. So this could be different to you and someone else depending on what's best for you. And again, if the bank term loan doesn't work, we have to start somewhere else. And it might be that you need fast advance funding. It's not the most favorable because of the rates, but if you use that cash, that money, and put it to great use where the benefit exceeds your repayment, your customer acquisition costs are faring well, your new customer acquisition costs, your media efficiency ratio, your marketing efficiency ratio, your gross profit margins, your net profit margins, what are your current margins? What is any kind of excuse me, cash flow that you have going on? What something else we have to look at is it structurally in the business, and it's not actually funding that you need, but there's something much deeper in the accounting and bookkeeping side. So you need somebody to help you with all of this. And if you do need help with a lot of these other resources, like getting the right accounting and bookkeeping team and all of this, business credit building and more, I'll try to leave more information down below in the description so you can get more details. And I can help you in many more ways than one. I'm not just a funding guy. I help people in so many ways, and I have a passion to help you. And I see the differences you make in your community, in your employees' faces, in your face, those around you, those closest around you, your consumers' faces, and just how everybody's happy. A family is getting what they need because of you, and the economy is doing better. It's boosting. And in your community, you might be the only store that people can go to and get this kind of product, or the only store at all within a 30-mile radius. And so they depend on you. And there's so much. And so it's become a huge passion project of mine that I've been in for many years now, while I have my other businesses running for me too. And then I come back to things that are running automatic, passively, etc. So details. So for this, rates range from 8.5%. You can look at prime, but right now, because of how much has changed, and I'll get to this part in a second, that prime rate number has gone down. So at a time, you can see 8.5 do about 15.99% APR, more or less. Current prime, 7.75% to about max, let's say 15.75% if you add 8+ points to it, more or less there. So you can see an adjustment of that. You might get a little bit higher, you could get lower. And it just depends on your risk associated to your file, your cash flow, profitability, the industry that you're in, the market value, the market analysis. There's a lot that goes on behind the scenes that you don't get to see, and that's stuff that I'm doing, the team, etc. And I'm doing a lot of stuff, helping out, understanding, doing my own analysis, making sure this is suited, it's best for this lender, this provider, and we can move forward for it. The approval rates, excuse me, exceed 70%. So that's a good sign when you get started. And again, you don't want to wait on this kind of stuff. If you need fast funding, you need to refinance something else, consolidate, you're tired of paying high interest or for other type of business that is suitable and can be after a look at it and see where you're at with a lot of this. Okay, that can be evaluated. It's important if you wanted to move something on something quickly and get this done within 10 to 15 days, up to 100K, if not at times less than 100K in 3 days, more or less. At times you'll see that. Other times, if you're asking for a larger amount, let's say over 200, 250,000 plus, could be up to 30 days, more or less. But the other solution, if you go get a traditional or with these other banks where they do ask for collateral, do you really want to give that up? Do you want to give up all the stuff you worked up to and you're going to need extra space later on and you're unsure about your client base or you're not getting paid fast enough, 60 days, 90 days government contracts, and you need to pay contractors, your employees, you need to make payroll, and there's a lot of other things you need to adjust for that you're just not ready to give up collateral and you're not in that kind of need. You just have to make that risk assessment and understand the details and understand business math on a deeper level. And that's something that I find a lot of people have trouble with is understanding the business math, the levels to building a business, the increasing of your product value and lifetime value, lifetime gross profit value, and seeing how you can ascend somebody to the highest amount of value that you can give them. Pricing ranges, why is something higher than lower? When is it best to have pricing that's higher and lower? Differences, what does that actually mean? The experience that you're providing to your base, especially if you have something seasonal. I have a lot of this understanding because I have my own businesses. I think it's best for you to get it from somebody as a person who has themselves together and knows the business side, has seen a lot of people's businesses, have my own, and I'm not a hype person. I'm not like the only person here and acting as a marketer only for the business. I run this myself and I've learned the high income skills, just so you know this, the income for life income skills. So these valuable skill sets I've applied to in different roles. And as a business owner, if you're going through this now or you have, you'll know that you've been the CMO, the CEO, the CFO. I've filled in a lot of these roles. And until you get to outsource, until you get to do other things, or if you do that and you can manage a lot of that, depending on where you are in your business. So here you see that the low cost bank financing option will allow your business to grow and thrive, especially if you have other debt, business debt, the MCA high rate debt, factorable products as well, anything out there. And just imagine what lower cost financing could do for your business. It can do a lot. Just imagine just sitting in silence and in thought and being appreciative and thankful that you already have this low cost financing option. Now it's to into the process. Now coming out of that and having the funds in the account that you can use and use it much more leisurely, not like you have to go through it quickly to pay it back and do all this other stuff, that other high rate products, or if you were only given months on credit cards. And if you needed an attachment to that, okay, it might be helpful if you've not been over leveraged. And if you have these high rate products, the point of it is to get out of those. A lot of the times people get back on that hamster wheel and you can see that. And if you don't qualify for this kind of stuff just yet, like I said, there are other options. If you don't have other funding, or if you do like an MCA, there's debt restructuring. I'll try to cover a little bit of that as we go, and you may be able to qualify for debt restructuring. One quick thing I wanted to show you. Here is my Instagram account, one of my accounts that I have for this business, just to show you that I am real, I am here. You can also find me on Instagram. Here is my Facebook profile and just so you have more information there. And this is my YouTube channel that I have here. And I haven't been posting on here as recently. This will be one of the latest videos. And I've been really busy on projects. So just so you know, I'm doing it. I'm actually in the action of helping people get funding and not just creating video after videos just to create them and be the hype or the marketing person only in that regard and in that respect. I'm having to juggle quite a few things and I know how to separate time and be calculated when it comes to this so I have the most energy and time efficiency in doing it. No upfront fees, so you don't have to worry about that being charged anything. I won't charge you anything. I know there are brokers out there for different services more than anything, more than these. And you start seeing like, hey, I'm going to charge you a consultation fee, and I'm going to charge you then a packaging fee, and then I get to put my points on top of that. That's not this, and that's not what I'm doing. In fact, they even have a free course out there to help people with funding that I could be charging you for a lot, but I don't. And I still have to update a few things there. So that's how much I care about you, and I give a lot for free. And I want you to know that I value you and I care about you and I put you first. It's people over profits. I really do care and getting to know more. about you, your characteristic traits, and all of that. And there's also a reason why I don't do consultation calls to begin with. Like I told people, and my closest people around me already know this, is because if I did that, I'd be spending a lot of energy and time. And if I haven't vetted anybody in, it makes it harder for me. I'm not going to say it's going to be totally time wasted or total collateral because I care about both sides emotionally and logically, but I can't be doing that all the time. If I've done a console, it's usually starts with like a Facebook Messenger console, then it can lead into a call if necessary, but we don't even have to start there. I have a form you can fill out down below. And if that form doesn't fill out, gets filled out, it's because of like a cache cookie thing or it's connected to if it's connected to my like email autoresponder tool, what happens is you might not know this, but you're subscribed to other people's lists. And when you don't open up their emails and click through, their servers on the email autoresponder tool doesn't like that because of the deliverability rate and more. And so it kind of blocks you from submitting forms that's connected to like this email autoresponder tool. And that's common. You see that. So if that happens, you can reach out to me. There might be a chat widget on my site that you can get more and connect with me. No upfront fees. Again, low interest, fixed monthly payments. So that's the advantage compared to taking these merchant cash advances where it was already of no benefit and you needed to use the funding for payroll, contractors to bridge cash flow gaps, emergency funds, inventory, and you're not getting inventory replenished as quickly, not coming off the shelf as fast. You're having a drier season, slower season. You're not getting enough units out. There's a lot here. You're in transition to another property, another building that you're looking to acquire. So you need to have the funds for permits and stuff like this, for economic reasons, zone property. And so it really helps you when you have these fixed, monthly payments, and it's not variable but fixed, which is a huge advantage. And it helps you during those times where you're having to go, uh, you're you're on a decrease, you're not in an increase, or you're just staying stable. And even for growth and expansion, you need this funding for that'll be useful. Working capital. It can sometimes be more restrictive, especially in terms of equipment and how you use the funding, and the overall goal of where that funding will go. But it is very helpful, flexible ways for you to use funding in more ways than one. Funds can be in like 10 to 15 days. It can be up to 3 days for less than 100,000, sometimes up to 100,000, up to 30 days if it's more funding. And it just takes more time to reevaluate your file, but it's lesser than what other places would get you in, which is like 4 to 8 weeks. And it could be just 1 to 2 weeks for the initial underwriting review, and then just the next stage of the underwriting, and then through the closing stages, 4 to 8 weeks, if not more time than that, just to get it. So here you're getting it much quicker. And if you needed something faster, you can qualify for this. I recommend doing this and not waiting because it could be the difference between you paying your employees and not. Having a time crunch, needing funds to complete a project, a build, and you can't, and just having to pay off insurance, premiums. Uh, if you have anything else going on, it really does help subdue and help you overcome those circumstances. One-time success fee after successful closing, excuse me. And then in the initial stage, it's not a hard pull. I'll get to the what you need to do with the credit side so I can review it and more. So in the initial stage, like anything, it's a soft pull and what goes through to look at. And then at closing all this stuff, you start seeing the hard pull. Like anything else you'll see in those later stages, a contract, signatures, and all this stuff. And then you start to see these closes and hard pulls. So that's later on in the process. And that's with anything that you get when it comes to bank financing for the most part. So that's to be expected. So on a sliding scale, starting at 6% for the lowest level and caps out at 2.5% or so, that might be adjusted, especially with the economy, the value out there, uh, your business, the risk associated through credit, cash flow, profitability, liquidity, just a lot of other stuff to look at behind the scenes. And so going through that. Here are the requirements you should meet and you have to meet. 680 FICO minimum on all three consumer credit bureaus. That's followed by a FICO 2 score check. You could also see 8, 9, 10s, and Bs, and you start to see that a lot of providers out there start looking at different ones to see the risk assessment, what you've had in the past balances, what's the most current, are you current on your payments? That's one of the biggest indicators on this. And so 680 FICO minimum. Other times you'll see 680 FICO Experian, and that would be enough. But a lot of the times right now, because of credit card debt, a lot of this going up, home and business expenses continuing to rise, price gouging, a lot of this stuff in our economy, inflation, things that have had to change. You start to see a lot of credit card debt go up. And so it's become even more important, especially when I help people with credit card stacking. So if you had 680 FICO minimum, that's not even enough for me to go help you credit stack right now. At the time it might go lower, but 700 for credit stacking to get you multiple business credit cards. And if it was a personal loan, a 680 could work, 670 if it's just trying to lower your utilization, that can be understood and you probably get lesser though, or you have to drop that down first. But here for the bank term loan line of credit situation, 680 FICO minimum on all three consumer credit bureaus, FICO 2. And generally, when you have higher requirements, the better the lender, the better the bank, the better the provider, the better they are at your business's needs. And so just understand that. And that's in a lot of cases for the most part. If there are compensating factors, we can be flexible on the 620 minimum FICO score level. But with this, doesn't always happen. You have to have great cash flow. It has to be up there. Average daily bank balances, little to no non-sufficient funds, negative days in the last 30, 60, 90 days. It has to look clean in deposits. Everything has to make sense for it to be at that level to take that kind of risk. And your credit report needs to look clean at a 620 minimum FICO score. You start having all these authorized user accounts that are blended and bought, and it's not yours. And they're getting smarter at this and evaluating credit a lot different on a different scale. And the systems have become a lot more clean when it comes to this. You have a lot of closed accounts, low paying accounts, minimums, low limit credit. There's a lot of stuff. And I've seen so many credit reports, bank statements, P&Ls, balance sheets. I know how to calculate a lot of this because I've been doing it for years and I'm a math oriented person. And so I look at a lot of this. 2 years minimum time in business. That's what you're going to see just about across all the board. So anything less than that, it's going to be an automatic disapproval if you don't have the credit. That's why I said we can look at other uh, financing options. And if you had collateral, there's also like credit I was speaking on a little bit earlier. We are on the cash flow revenue based blended type of model right now, service. And then you have collateral, account receivables, inventory, machinery, real estate. We can look at just that and lend based upon the collateral. And there's lenders for that. So if you weren't trying to go through cash flow, revenue based, and you didn't have the revenue for it, or you did, but you wanted to collateralize something else, maybe to knock off some MCAs or something else, cash out refinance. I help with a lot of that as well. Also on the real estate side, fix and flips, multi-unit, multi-family, single family. There's a lot of projects and stuff that I do and network that I have to help with. So 2 years minimum time in business, 250,000 plus minimum annual revenues for the last 2 years. Other times, if I take you to another bank or a few of them, they might just see the most recent last year, 250,000 and the one before it. If it wasn't that, okay, what's the explanation that it wasn't there yet? You have 10 years in business. Why was it at 180 and then you had one at 270,000? Can that be workable? And there's a lot to look at. Well, if something happened where it was out of my control. I did disclose this, but they didn't pay me for this project, and I had an outstanding balance of this, and it transferred over to another 30 days that it shouldn't have had, and it was not the right vendor, and they closed down, and it wasn't my fault. Okay, there could be a lot in an explanation. What's your average order value, numbers to make sure you get above 250,000 or 250,000 minimum. And that's what I love a lot of is like figuring that stuff out is the numbers, how many customers, new customers, appointments, or how many of these do you have new customers and what's the pricing points, what are they buying, what's the increase, decrease in cash flow, net present value, internal rate of return, discounted rate. Now we go a little bit deeper into other stuff like equity too, which is something also that I have and I'm working on as well. Uh, and so right here, 250,000 plus minimum annual revenues for the last 2 years. Industries acceptable are all except cannabis related businesses. I have friends out there and people out there that I've tried to help with cannabis related businesses and it just won't work. Anything THC, anything just with that realm. And you know what I'm referring to without saying it directly. I don't always say everything directly, by the way. I'm a more infer, read between the lines. I want you to get there and see it for yourself. Other times I'm very direct, and I can be direct when I have to be. I'm calculated in that. It depends also on the person. Some people need to have it directly, others the infer method works, and I can just bundle the two together. So there's that part. So that'd be harder to do because of regulations. Is it non-regulated at this part? And you didn't need this license for this, and you're doing this at this level, and you're acquiring this and then put this on there. Greenhouse, indoor, outdoor, there's so much yields. There's just so much red tape when it comes to this, so it makes it hard. So if you were in that space, potentially the credit card collateral route could be the way to go. And there's some other options if it's like a cash advance and those related with the processor that you have, that might be workable depending on the state, depending on regulations. It's still very hard to do. Eligible states, all 50 states, more or less there. You must be current on existing debt repayments. Uh, Missing a payment is hard. Having a late payment on credit, I'm not going to say it 100% disqualifies you. You could have a missed payment because it's getting harder for you to pay something in your business, the advance, and then still try to qualify for a bank term loan slash line of credit. Line of credit would be harder in a lot of those cases at that point. Uh, and credit requirements for lines of credit, not even 680 gets you that much, or even a lot of the times in the door. There's a lot more, 700, 720 plus, excuse me, is the sweet spot. So it must be current on your existing debt repayments for a lot of the bank term loan financing options. So that's it here. In a lot of cases, you don't want to find yourself behind a payment, two payments, anything derogatory speaking, and sometimes it just has to make sense on the situation. Um, and yeah, just falling behind over and over makes it hard. And even if you're going to get something of a lower interest, like you'd be thinking like, well, I can manage that because of the weekly, daily, or whatever I was having over here and the amount of debt. Well, it's not just one thing, it's multiple things. It's well, you're losing on this part of your business. So what makes us think that you'll be able to make the repayment because you lost five customers? You're having seasonality issues. This is more for a seasonal fix. Once you go over that, you're going to be back in the same box because of these reasons and because of that X, Y, and Z. So there's a lot more to look at this. No missed or self-negotiated reduced payments. Excuse me. So you don't want to find yourself in a situation where you've had to miss payments and then also negotiate reduced payments. You see that a lot of the times too with MCAs, maybe with other debitors, creditors, stuff like that, vendors, suppliers, who you're working with. Other times that's manageable if it's appropriate on how far it's been, how much have you done of that, but no missed or self-negotiated reduced payments for the most part. Demonstrate the ability to carry your obligated debt. That's at the core of it because of your existing cash flow versus your new cash flow if you were given a loan amount. Let's say you were given, you're doing 250,000, 300,000 a month, potentially qualifying for 250 plus that amount. And even with bank term loans, there could be more given than you'd see with an MCA, usually 1 to 2x or 75 to 200% of your average monthly revenue, your lowest monthly revenue. Uh, Although there is no collateral here, there's a blanket UCC lien, personal guarantee. We'll be getting into that in a moment. But there is no collateral with this, which is amazing. And depending on what you have freed up, UCC lien, what's been encumbered, take that over, bank, take that over, position it, and have you better off, especially with the bank term loan. But you have to demonstrate you can carry with the current debt. And a lot of the times, your debt service coverage ratio, globally, business, personal, you want to have a 1.15 DSCR. And I do these calculations. I see if, okay, if you had this now with this debt, or if you didn't have any, if you're not looking at the debt to refinance or anything just yet, what could you qualify for if you were given 300,000 based upon all these other details on your existing cash flow? What would your cash flow look like then? Could you take 300? Could you not? If it's not 300,000, could we start at 275? Is it 250K? Is it 150K? Is it up to only 100,000 because of all these external circumstances and internal circumstances? So it's like playing with the numbers and seeing what you could qualify if this, then that, if not, then this. So that's a lot of stuff that's happening behind the scenes, and it's going to be very helpful for you. So note, many times with bank term loans and even lines of credit with specific providers, you see a FICO SPSS business liquid credit. needed of a 155, 145 could be a lot of the times a passing scale. Other times you see 135, 140 plus. SBSS business liquid credit, and a lot of that is evaluated at up to 350,000 amount, usually more so for like the SBA loan side, sometimes up to 500, but a lot of 500K, excuse me, but a lot of times up to 350K. Or even just a paydex score of 70 plus or so. You'll see that at times too, and what they're looking for. So your Dun and Bradstreet number, your Experian, Equifax, things on the business side will be very helpful to have. The better business credit you have, the better. But if you don't have any, I'm not saying it won't qualify you, but to a degree, a lot of these banks are looking for that business credit established. How are you using business credit? How are you making your payments and making sure that the business can stand on itself too, aside from just looking at your personal credit. And your personal credit can also help you establish your business, and that's what it's built on is your personal credit a lot of the times. So or so, but even without the business credit level being up there, it's a possibility it could work. It's on a case by case basis too. Terms 2 to 10 years, 2, 3, 4, 5, 7, or even 10 years. So that's an advantage as opposed to the shorter term financing, credit cards, or even certain like collateral backed options. You might not even get past 2 years. 5 years you might get more or less depending on that kind of real estate collateral. Are you on an interest only payment, a balloon payment? You're gonna do this on a 30-year note, refinance before balloon. There's just a lot of stuff to look at. You have something else, interest only, lines of credit up to 5 years, and this and that. There's a lot of stuff here, but 2, 3, 4, 5, 7, or even 10 years. Important notes: any owner that has at least 20% or greater ownership stake in the business, and without being said, you should know. If you didn't know, I'll say this too. Certification of formation, the SOS. A lot of this will be verified by. So making sure that this is all accurate, that this is listed, that these owners are there, not just a ghost owner. It's important that I know, and I'm going to get into bank policies. I'll actually mention this now. You should have at most two only owners or less per bank policies. Other times it may be if I take you to another one, but a lot of the times here you cannot have more than two bank owners because it or business owners because it makes it much more complicated. And you have to look at each person's personal tax returns and this documentation here. Well, this person's address, well, the number, this doesn't verify this. Why is the EIN looking like this, but then it's under their name, and I'm like, what? Why is it underneath another business? And there's a lot to evaluate, and it can get really out of hand. Somebody doesn't have the right credit, and that's also something to look at. The 680 FICO credit score is with those two owners that you have, do they have both 680? There's only one, and it can outweigh the other one. That might be right. How much ownership does that person have who has the greater credit or has a greater stake in the business? Is it 51% and over? That would be awesome to look at, and they had better more than the other one that was less than 680. There could be a case to be made there, even at a 20% plus level. But you both want to make sure you have your credit score up there. 680 plus will really do it and will move the needle. Like I said, 620 compensating factors. One person's credit could be higher. If that makes sense, then it makes sense. But if it doesn't, then it doesn't. There's still things to look at in terms of the credit report. So any owner with at least 20% or greater ownership stake will need to pull their own free credit report. And keywords being free credit report. In parentheses, I put here the full report, not just the summary. So expect 15 to 100 pages or so. You should know what it looks like as a business owner, as somebody who takes care of their personal finances in life and in business. And if you're not consistently looking at your credit, that's okay, but you should know what's going on before you go get financing, before you apply to anything, not just financing. And even when you're not, to be ready, I constantly look at these things. So the full report, not just a summary. I don't want to be sent one page and I look at it and I have to go ask you for everything. And I had it right here. Did you just glance at it? Did you forget about it? And it's kind of common sense, right? Like, I'm not going to look at one page or just 3 pages. I'm very nice, please. I don't want to be that person. And I don't want to have to come back to you and spend our energy and time doing things we shouldn't be doing, and we're not being productive. And you have things going on in your business and in life that we want to leave our day having enough energy to go into the next part of our day, feeling good, attending to our family, loving on our loved ones, doing the activities we'd love to do. and we probably do less of because we're so focused in our business and are looking at it from the outside in. I highly recommend using the Experian free credit report. I even have a link there. So if I send it to you, and I send a lot of this to you in an email, and I list the documents needed, you'll see that. If you pull your own free 115 to 100 page PDF report, keyword PDF, it will not count as a pull on your credit. If we do it, it will. So please do it yourself. So that's how you'll see it. No hard pulls until you go to closing, like I was mentioning earlier. All owners with a 20% or stake or greater in the business should ideally have a 680 FICO credit score with all three credit bureaus again. And if your other partner doesn't, and I'm looking at only a 600 FICO Experian for another provider we go to, but still at the same time, we need to look at both on all three consumer credit bureaus. Uh, so make sure that you both stay accountable and check each other. I have people come to me who get these and they don't have each other accountable. You should be doing this. You're in business together, not just looking at who retains asset or control over this and this, shareholders, if you're trying to appease shareholders. And like there's a lot of things that happen. I get it while your score drops. I get it. We're all humans. It happens at a point. I've gone through a lot of this myself. I'm not superhuman. And I still see a lot of the business expenses going up too, especially in this economy that I have to mitigate risk on and understand what I'm spending on recurring services, subscription services, high cost, low cost. I get it. I understand it. And if only one business owner can meet the 680 minimum, we may still be able to make it work. There's other low cost bank credit facilities where your file may still fit. So the cool thing about this is I can do things directly and go to different banks and submit it maybe to three or one to start with and see what I get in response and go through this with them on the back end. Other times I can do it indirect, which in this market, a lot of the times this makes complete sense. Your business, the economy, market value, the relationships in-house look first before it goes here. And so at times you might get a look from a couple banks and competing for your business, and then one of them really wants it, and they're like, "Yeah, I stepped in, I made a better offer." And a lot of the times you'll get the better offer this way. And there's a lot of stuff to look at. So you can look at a couple of banks, if not one that's most suited to you, your business's needs, and that's where it gets submitted. So a lot of times that's the best way to do this, especially in the economy that we're in. And even when things stabilize and when they get there and they're starting to climb back up, this is still going to be a premium option to go into, and you get the best look overall while protecting your credit and going in that direction. So a lot of the times that's the best fit to do this in. A lot of stuff going on behind the scenes, back end, looking at things. Here, having existing debt is fine. Many of the applicants who do come through are successfully funded with having existing debt at the time of their application. The having of debt does not automatically disqualify you. It's just another data point that goes along with your other company specific metrics that gets factored into your approval. And you should be looking at this. Can you easily afford the existing debt and potential new debt? Is really what you should be asking yourself and what we'll be asking as well. Many times we will get a decision of a yes or a no in about 3 to 4 business days. So that's also the advantage as opposed to other things. Sometimes it takes a little bit longer. Good news is that the client files come back sooner. So if you hear something within 3 days, good. Other times, if it takes longer, in theory, that may be that this is a good sign that things are being moved forward and it's being extended. The underwriting process, like I mentioned, can take up to 30 business days, funding days, as I should say, as well. And because banks, this is bank financing, it takes time. Private funding options, lending options, the people giving you their money, like syndication, a lot of stuff there. It gets to move faster because people put money in a pot too. Lenders have their money, they move here, they get it back, they give somebody else. So there's much more, I don't want to say vigorous because this is lesser than other traditional ways. So the good news is you can get a yes or no decision in just 3 to 5 business days, as I was mentioning earlier. Is there a PG, a personal guarantee? You should expect that with anything. You're looking for no PG. This isn't like, what's your business liquid accounts, corporate accounts, how many employees, what's those projects, are you consistent in revenue? And that just doesn't happen. Credit cards, there's some corporate stuff, but it's still hard to attain. How much liquid do you have? Cash flow, there's a lot of stuff. So expect the PG, just be accountable, be responsible, as I think you know that, I don't have to say. So sometimes a business applicant is strong enough as a business only to borrow the funds with the PG. So I'll mention that. So if your business is strong enough, but a lot of the times you're going to see a PG. Other times it will make the bank feel more secure to have ownerships PGs. Each scenario is different. In either case, if you plan on repaying your debt, it doesn't really matter. And it shows responsibility, accountability, and your maturity. Your maturity as a person, those in the business, and also the business itself. No collateral to pledge. This is really enticing and a great option. All the credit facilities being applied for here are for unsecured financing. No secured financing, no having to offer this collateral. They want this and they're going to lend on this and they're going to give you more and more, but you had to offer up collateral and you didn't want to do that for many reasons. And if you didn't have the collateral either, and the right kind, and they didn't understand your file. That's the thing too. A lot of other places like they don't understand your file. Uh, what is it that you have that has intrinsic value, doesn't have intrinsic value? You're looking at patents, trademarks, uh, contract funding. There's a lot of stuff, and they might not understand your situation, so you want the best look. This typically means that as the borrowers, you are not required to pledge collateral to secure your transaction. So, however, the bank still place a UCC lien on the general assets of a business. So you can see a blanket lien there. This will do two things. It establishes the bank as the lien holder for legal purposes like anything. And two, it alerts other future lenders that you have an outstanding debt, which can serve to help you avoid getting over leveraged in the future. That's the point of it. But you see a lot of these liens for, and so there's communication, what positions you should see lien one, two, three, a lot of this. In addition, there's also a business here. Let me sorry, this typo business line of credit side to this. So that can be reviewed if you qualify for it. Here are more of the details on it. You don't have to pick whether you apply for a bank term loan or a business line of credit. There's a one-page application for your business to start the process for both. And you'll receive offers of the maximum amount on either or both that you can qualify for. So if you qualify for, you should see offers. Lines of credit are harder to get, even with the other alternatives, non-banking. They're still hard with credit levels. The industries are hard. Construction, trucking. You're even starting to see more manufacturing, supply chain issues. A lot of the stuff and what we're getting ready for even more of. How to apply. So if you meet the qualifications, a one-page fillable, workable, working capital application that I can share with you in an email. Depends on our email communication. I might send it already at the first email, or you look at this first. Okay, it makes sense. Then I'll send this to you. I can send this to you in time or right away if this makes most sense. It's very simple on what it'll ask for. You'll see that a couple of owner spots. If there's only one owner, you fill out everything you need to there. Sign, date, if there's that being asked for, or just the completion of signature on the owner or owners, and we go from there. So there's that part. If it's my own that I send you or something separate to fill out, I've done that before in the past, but a lot of the times if it's something already suited to how we have it here, then you'll see that. You then have to go to Experian.com, as I was mentioning earlier. That'd be the best place to do it. There's also uh, other places to do this I won't mention, and where you can see Tri-Merge, but Experian will work. And go to Experian.com and download your free credit report. The full report, as I mentioned earlier, 15 to 100 pages. And please download the whole report into a one-page PDF document format. Send it over to me. You can send it as an attachment in an email. It's confidential between you and I, as I have them with each and every person. You can put it in a Dropbox, a Drive. Dropbox works. I like to organize a lot in the Dropbox before I send this to the team, the lender, and doing a lot of stuff. It's very helpful to have it that way and accessible. I organize a lot of this stuff, reviewing, organizing, etc. The first two above can be sent faster than after the initial review. If it's best to move forward, I'll let you know and what our review was, and I can collect the rest of it. But a lot of the times you can submit the rest of it as it is. If I have everything already before and I say, okay, well, this is a good file already based on your credit, based on what I know now, the business. And a lot of the times you can start already submitting the rest of this. So, number three, a copy of your SS4, IRS form showing your employee ID number for your business. Number four, 6 months a recent bank statement. So yes, there is more documentation, but what's the cost trade of the opportunity cost in the economies of scale? What are you looking at here? You're looking at an oligopoly. You're looking at a win-win-win on four quadrants. And there's no way you can lose out on a lot of this with interest being favorable, the monthly payments, what you're getting for capital, showing more growth with this kind of capital, with more time to pay, with lower interest. it gets you better. And also a lot of the times in the business credit side. So six most recent business bank statements. Other times, if it's like a merchant cash advance, you'll see probably 3 to 4 months, sometimes 6 months. Agricultural, you'll see like 12 months and just some things they want to see in advance and a lot of stuff. But here, 6 months is very reasonable. And a lot of the times is what you'll see anyway. So if somebody were to ask for more, hey, can I get the last two just to see, just to make sure this. So six most recent bank statements, all pages in PDF format. Please PDF format. I see people who take pictures of things and barely send me something, and I'm like, what? And I get it, technology wise, but if you have somebody who can help you do that, if you can do it yourself, do it. It's very simple to log in, download those statements. If you had to print them from there, or how you needed to, or excuse me, send them over, print preview, what pages, but have all of the pages in there so I can see from top to bottom. If I'm missing something, I'll likely point that out. It's very simple to get the PDF for a lot of this. Articles of incorporation, certification information within the state. So that stuff is very important. Articles of incorporation again. Three most recent business and personal tax returns. Other times I may ask for two personal and business tax returns if it's a different lender, and you might just need the 3 years time in business though. So instead of 2 years, the other one might need 3 years, but you would be asked for 2 years. Uh, in this one here, 2 years, three most recent business and personal tax returns. The more you have, the better. It really does help you. A completed business debt schedule, and sometimes here, if you have an extension being filed, proof of extension, helpful. And we can try to get things moving forward and seeing that this is under process and maybe you had an adjustment you needed to make. Seven, a completed business debt schedule. I can send this to you in time, or if I already send it with the working capital application, you'll see that as an attachment. And I won't show you it all here, but I have it and it shows the original amount, current payments, current, all this other stuff. It'll help me analyze and do a better assessment. So I'll ask for that name, signature, print, signature, date. You'll see those things and so forth. Right here, year-to-date profit and loss statement and balance sheet. This I can't emphasize enough. Uh, Sometimes you'll be asked for like the last 90 days, dated within the last 90 days, year to date. So being that it is November, you might watch this video in December or another time. Year to date is important. So January to now and dated, and you see 2024, not 2023 of January last year to this year. That's helpful, but when you put that in one place, like you're putting January of 2023 down to November of 2024, it's like a lot could have happened between then, and we don't have the full picture to see in increments and quarters, and just kind of assess what happened back then. So those would be asked for separately. But here, year-to-date profit and loss statement and balance sheet, I'm going to check all of this, look at everything. I analyze a lot of this. How does this look like with taxes, balance sheet, what is listed here versus here, net operating income, do my analysis, deductions, SDE, EBITDA, a lot of this other EBITDA, excuse me, a lot of this other stuff. Take out tax before taxes, after taxes. Nine, a copy of owner's driver's license. So your driver's license, your other partner's driver's license, 20% plus, and even you have another owner, have that listed and everything there. So I know there's two owners there, and at most with bank policies, a lot of the times you'll see that two or less. A lot of the times, like I was mentioning earlier. Front and back, a clear cell phone picture is fine. Sometimes we just with the front we can get it in, but front and back, a lot of the times you're gonna, if I come back to you, I need a back the driver's license. And sometimes people lose their license or something happens, and if the reason and if it's suitable, it's manageable, but make sure you do the front and back. So I would already have a picture of that front and back, not expired, but front and back and ready to go and have all of this in one place. Like if you're already doing your financials, you're doing your budget review, which a lot of people are doing right now at this time. People are in travel, getting back to the office, budgeting reviews, and getting set for forecasting of the future. Just make sure you have everything. Put it in the Dropbox nicely. I would do Dropbox. Drive works well. Google Drive, but Dropbox. Put it all in there. Share the link with me. Send it over to me. I have everything to look at. People will do that. Encrypted stuff. What's the code? Make sure you have everything ready. If you don't, it's okay, but it can take it might take you a little bit more time. You might send me a couple of emails like I've had before with different documents or a document for each, or it's all under one. But in the Dropbox, it's helpful. Uh, that would be one of the best ways to do it. And I can share with you a link too if you wanted to. If we're going back and forth in the email, I can have a link. I usually will create a Dropbox folder for you, and Here it is. I shared with you the link. Go ahead, go in there. You can edit if you needed to, add, adjust, whatever you needed to. It's your place, your sanction, place of safety and security. You can go in there, and a lot of things I'll be able to review and look at it, and with the team as well. So have that there. A copy of a voided check or a bank routing account or bank routing accounting number info. Excuse me. There's other things with the copy of a voided check. If you didn't have that, and I'm not going to get so much into detail on that. Copy of a voided check, if you have that, or bank routing accounting number info here, and what you can submit. Once approved, there's also like the whole bank letter thing. I'm sure you probably know of signature that the bank saw this and you are the primary holder. All that stuff. Once approved, the banks will wire your financing directly to this business bank account at closing. The title on this account must match your application, no exceptions. And this comes across to me a lot more on the MCA merchant cash advances, like, hey, can I get this funded to this other account? This is the one that was listed, the one that we checked or we did, but this is the primary account we need to deposit the money into. There could be a lot of derogatory, there could be a lot of scams, a lot of misusage of funds, commingling. It's a red flag. Don't do that. Now, with like the MCA space, a lot of the times time elapsed 30, 45, more time, more or less, even lesser. You might see something where like, what's that's in the account? Where you move that into another account, that's on you. And as long as we can see what's being deducted from that primary account, where those withdrawals will be made to be paying the bank back. So that has to be there. So once approved, the banks will wire your financing directly to this bank account, business bank account. At closing, the title on this account must match your application, no exceptions. An AR aging report, if applicable. So I'll put aging report, if applicable. Copies of your MCA contract and contracts, if I'll put here, if any. Make sure you supply me with those. If you have that, you can look in your search bar, get a copy of them. You should have them already and everything ready to go. So copies of your MCA contracts, if you have any, or if it's just one contract, send that over. It'll be very helpful. Looking at it, looking at what's there, looking at what can be done. Then with the business debt schedule, with Alliance, there's a lot of stuff. And it helps your case out a lot better legally and being compliant. It really does help you a lot and backs you up. So if you have these, do submit those. Business line of credit, option one, and it's the same. I had not adjusted that so much because a lot of things are changing, but here you see up here the prime rate. And here I don't have it. I have to go and update it, but just more or less interpret what I've given you with the other one to be more or less the same with this option. So over here, here's another bank term loan type of option scenario. With the other one, you can look at past 350,000 in a lot of cases. There's also family offices. So if you have a MCA, you might be able to get a longer term than just 10 years. And it's that helpful for you. Low interest option. So if you have MCAs like of a 500,000 and above, there are credit facilities and places that I can take this to, like a family office. And even if you have less than that, we can look at that. Certain banks may not want to refinance so much MCA debt if you have 250,000 and above. Other times it can work depending on where that cash flow is. Other times, other banks might want to see some payment history underneath that MCA factorable loan, factorable product. So just expect that, but it's great to get started right away, especially to help you overcome these challenges with higher rates products and you're running out of debt and that you need it to use to fuel your business, to use it for working capital growth and expansion, to double your ROI, help you with your margins, help you satisfy your clients and others, and so much more. So 30 to 350,000, you'll see with another your choice of 2, 3, or 5 year repayment terms, normally followed by the amount of time you have in business. So normally, if you have 5 years time in business, you might expect a 5 year, 3 years, 3 years plus, 2 years, 2 years plus. A lot of the times you'll see that. You get monthly repayments, no prepayment penalties, and you'll see that as well across the board with a lot of this, no prepayment penalties. You get fast loan funding typically within 2 weeks, fixed annual interest rates. It can start as low as that. Rates can be 7 to 12% or so, but again, with the prime rates where they are at, somewhere around 7.75 to about 15.75% plus max, more or less. So I still have to make some of these adjustments, so don't just go off of all that. Leniency on use of your proceed options. Term loans can support construction, remodeling, and more. Bank term loan general eligibility, 3 years time in business, like I was mentioning before. Be a US based business owned by a citizen or lawful permanent resident. That's very important. FICO of 680 Experian a lot of the times or higher. And it's going to be a weighted score. Other times they want all three consumer credit bureaus. And I would go with the other one first when you meet all that because I see that as a higher option to go into and the facilities and the bank loan lenders and the options I could look at it from there. Have no outstanding tax liens. That goes across the board. Your minimum annual revenue requirement is of 250,000, like we saw earlier. So tax liens, we'll back up here. Make sure that's getting sorted, figured out. Even at times with the tax lien, depending on the stages it is in, is it reasonable? Like looking at that, but really you don't want to have outstanding tax liens. Correct that first. Your business will not have any bankruptcies or foreclosure in the last 3 years, especially with like MCA products like those. You have something in three within the 3 years, like it's going to be hard. After 3 to 5 years, in a lot of cases, now it can be fundable. So no recent charge-offs or settlements. Your business must have appropriate cash flow to support the loan payments, like I mentioned before. Here's what you can use this one for: general working capital, purchasing inventory, hiring employees, refinancing business debts, marketing, construction or remodeling, business acquisitions, partner buyout. One thing I want to mention is there's SBA options out there. So if you could take more time or if you wanted to refinance this underneath an SBA and it was plausible, okay, in that time. But a lot of people don't have the time to wait, want to supply all that information, and they might have gone through it, they've gone declined, they didn't have enough business credit, enough assets, enough asset protection, enough liquidity they can get out of those assets, market value. So a lot of the times this makes a lot of sense and it's working a lot right now in the market, being very responsive to it. Business acquisition slash partner buyout. There are several common ineligible uses of proceeds for this program. Startup financing, house flipping or real estate development. That's a fluctuating department and buying, sell, double dipping sale. Like there's a lot that can happen within the housing market. Flipping and real estate development, it becomes very, very difficult. Refinancing personal debt, floor plan financing. Industries that are eligible, you see from hair salon to online retailer, accounting firm. There's a lot of businesses that can be accepted. And what I was mentioning earlier to that as well. Here's a list of some of these restricted industries. You see bail bonds, mining, cannabis industry, like I said before, mining, precious metals, gold, copper, a lot of things like that. Real estate development, but depends on like what is classified as real estate development, coaching, or what are you doing underneath that space? Is it stable with deposits? But real estate development a lot of the times. Gambling, ground up construction contractors, used car dealers, oil wildcatting, pawn shops, smoke shops, or vape shops. No exceptions to a lot of that. General eligibility, 3 years time in business with corresponding tax returns, for-profit business proceeds, working capital, debt refinance, equipment purchases. You could see that with an asterisk, like it might not be the best. Minimum annual revenue requirement, 250K. Individual owners owning 20% or more of the business must be U.S. citizens or legal permanent residents. Credit for all individuals owning 20% or more of the business. You see what I said earlier, the 155 business liquid credit score, FICO, 680. Public records search for business owners, no bankruptcies in the past 3 years, no foreclosures in the past 3 years, no open tax liens or outstanding judgments. Cash flow analysis will be used to determine by these documents and what I could look at as well. 2 years of business and personal tax returns for this, year-to-date profit and loss and balance sheet, business debt schedule, 6 most recent business bank statements, barriers to funding. Some of these items to watch out for that can lengthen the time for the funder or render a business ineligible. Declining revenue trends that you can have in borrowing businesses or affiliates. That doesn't exactly mean you'll get declined. Just have to look at what's going on there. Unfiled tax returns. Are you in an extension? What's the reason? Criminal records, businesses or guarantors that are mid litigation, undisclosed debt, UCC liens, extra. Global debt service coverage ratio, as I covered a little bit earlier, what is determined on a 1.15 scale. You see a little bit of that up there, excuse me. I won't go through all of this right now. I'm going to close up here soon. Conducting a soft credit pull that will not affect your credit score. However, in processing your loan application, the lenders who we work with do request your full credit report from one of or more of your consumer reporting agencies, which is considered then a hard pull and happens after your application is in the funding process, matched with the lender who is likely to fund your loan. Underwriting guidelines based on debt coverage analysis. Loan proceeds cannot be used to refinance short-term obligation created with the intent of refinancing it, like with the SBA 7A loan. The calculated global cash flow for guarantors, recommended gross annual income of 250,000 and above. So there's a little bit there to go over. And there's also the SBA side of it down below that I have. So if I share with you this document, let me scroll down here to show you. I also have this right here that if I click through, I can show you right here. And there are options to that as well, but that can take more time. And I'm not going to spend my time today on this video going over SBA options. I do have quite a bit here to go over and what would be assessed. Global debt service coverage ratio, different lenders, LTV, cash flow, determine, analysis. If you wanted up to 150,000, you had 700 plus type of credit and more. A higher FICO SPSS, business liquid credit, and up to 150,000, and you didn't have the right cash flow profitability, we could look at another option to explore there. And so, yeah, there's quite a bit here as I'm scrolling through here. FICO scores, business liquid credit, revenue, and so some things overlap too with the bank term loan. And if you could spend more time now and supply more documents, PFS statements, and more, then we can look at doing that. So that's where I'm going to leave this video at. I hope you got a lot of value from this and you have a better understanding of where to go, what option is most accessible and readily available, how I can do this directly and indirectly, and what approach a lot of the times is best for you. And it's on the back end, looking at it, reviewing, understanding of a lot of this. Uh, and again, down below in the description, I'll try to leave a form for you to fill out on my site at viralfundingsolutions.com. So if you click there, it'll ask you from one or two options to select, and then you'll get to the form. And I'll leave that down below. I'll leave my email if you want to get in contact with me, reach out, and I can send you the form that way, or I'll send you a document like this if it's not below in the description, if I've updated things, and based upon your situation, what's best, customized solution, what meets your needs. And a lot of this I'm showing you, and other things that I'm showing you out there that you might not even been able to pick up easily. And so I think you'd love to see things like this and even more of it, and be able to work with an expert in business, understands funding, is not only the funding guy, but I get business. I understand how to help businesses in more ways, structurally help them. Uh, Credit side, credit, cash flow, collateral, liquidity, equity, management tools for better cash flow management. I can help you with that. Understand even better how to market your business. Uh, Personal growth, development is something that I love because you go as far as this goes. Your body transforms your mind. With what you do here, carries over here. And quickly, my story. I was in a 9 to 5 role for a financial logistics company for a huge contracting company servicing HP and others in the vicinity. I was doing a lot of data, budgeting, analysis, inventory, purchases, management, control, budgeting quite a bit, reviews, lifting up some media boxes to deliver, working with different, the word I'm looking for, departments, working with different departments. And so I was immensely underpaid, undervalued, I'd say underappreciated. Transition happens, 50 plus people were relieved out of my control. I have to go back on unemployment benefits and food stamp cards. This was many years ago. And I didn't want to just pick up another career, another job, go get more certifications, more education. And I'm an academic. I studied sociology a little bit, played Division I soccer, and then I got into chemical engineering. That's just how my brain works. And I love math, I love systems, I love chemistry. Chemistry was my favorite class. And so I did that for some time. And I had to make a big decision. I had satisfied other requirements for the business side. And I thought, I want to start a business. So I went in that direction, got my degree through there, and I haven't looked back. One of the best decisions I've made. I've worked in construction, manufacturing, warehousing, was once a ramp agent, believe it or not, at the airport, courier role, financial logistics. And I was learning a lot. Things that weren't best, higher risk. And I was learning other things out of my control. And not everything in life is linear, as that can go to show you. So I have a lot of young wisdom, or wisdom you can say at my young age, you could say. Uh, and I talk less and I ask questions, and I'm that introvert. Here you see me speaking, but I like to be behind the scenes. As if I didn't have to do this, great. But I know this brings you value. You want to get the right person. You want to do this correctly with the right person, if that matters to you a lot, which it should. Why? Why the person is the way they are, and the cause behind them, their values, their vision, their mission, their morals, their ethics. What do they stand by? What do they look for that's farther than this? What kind of relationship do you want to have with that person that goes far beyond getting funding? Or if you couldn't get approved for, you're not ready yet, where that gets started and where that evolves into. Built a lot of amazing, long-lasting relationships, but I've also had people who turn their back on me for not my fault. I'm just here to help. This is me, innocent me. And I'm not perfect, but I've worked on a lot of these characteristic traits to know that a lot of the times it isn't me for the most part. And I do care about your best interests at heart and not having to self-sabotage yourself and put these things that you shouldn't be doing. And when you should have reached out and I had a better solution for you, people find that out too late, or they find it out really early and they're like, yeah, I'm gonna only work with you. And because you know your stuff, you have the best access to this, you know what you're doing. I got you. I'll take care of it. Don't worry about that. And so that happened. And long story short of it, well, going to make payments at the grocery store was hard. Even looking the person in the eyes, hard. Happy, grateful, and thankful to walk out of there, was still stressing out. Stress levels low, but then having to prepare my mind to come back in, so hard. In the act of it, the reality of it was hard. And the food stamp cards and all that, unemployment benefits, searching for work again. But I knew at that time I could start building something. Even going to have a family meal was so hard for me. Didn't want to feel like a burden to my family. When I would pay, and times I wouldn't even speak up. Wish I had more savings at the time. So I felt like a burden, even though they wouldn't tell you that. It's what it felt like to me. So I knew I had to make a change. And luckily, I had that luxury at the time to start working on building something like we all do. We get online, something similar, digital marketing agency, lead generation business, health affiliate marketing business. One thing led to the next ventures. I still had my bumps in the road. I had to learn from the right people. And then I got right back on track, learning personal growth, development even more. And yeah, and I haven't looked back since then. So that's all for me. Thank you for watching today. Look down below in the description to get started with your bank term loan, bank line of credit, all underneath one application. If you don't qualify for this, there are other options on the table. I'll leave my form down below. I'll try to leave more details. If this isn't there, that's okay. Reach out to me. You saw my social media presence. I have more. LinkedIn, very reputable, verifiable. You can see me out there. I am here. This is me. I do have a, if you didn't know this, really quickly, I have a Salvadorian Mexican American background. I'm a what you call a hybrid. I get along with many people, different personalities, characters, not because I need to tolerate it. I know how to tolerate well, and I know when to put a line in something and let it go. But my background has made me that person very adverse. I've gone through a lot of adversity. I do a lot better alone individually. I can do very, very well and exceed in a team, lead a team, with lesser words, with more of my actions. Uh, And so, yeah, that's kind of made me more versed in this. I am from California, Orange County, California. I live in Washington State now, though. Been living in Washington State for many years. And so, um, yes, I do know how to speak Spanish, and I am fluent in that, read it, write it, etc. So I come from beginnings where I wasn't just handed everything. Yes, I went through school and my parents put me and my younger brother in a position to grow and excel. And I've seen what my parents have gone through with housing and where they had to move from an apartment here, not even living in their own house, underneath their sister, my dad's sisters, and a lot of families there, and to an apartment complex, and not at the best area either. And then moving from there into a better area in California that was the better side and great neighborhood, coming to Washington, and yeah, very easygoing person. So that's all for me. Thank you for watching. If you haven't subscribed, please go and subscribe and click the bell notification icon so you do not miss any future content that I'll be coming out with. And also, if you enjoyed this video, I'd appreciate you giving it a thumbs up and feel free to share it with others if you would like to. So that is all for today. Thank you.